Hello traders, do you ever feel like you are trading in the dark, unsure if you are in the right direction, or maybe you are making quick decisions based on short-term charts only to realize later that you are not aligned with the bigger picture? Well, that is where multi-time frame analysis trading comes in. So in this video, I'm going to show you how using multiple time frames can give you a clearer understanding of the market, help you spot higher probability trades, and increase your trading confidence. Okay, if you are ready to take your trading to the next level, hit that like button and don't forget to subscribe for more actionable strategies. Now, let us just start with the basics, okay? What exactly is multi-time frame analysis trading? In a nutshell, it is a strategy that involves analyzing price action across different time frames. Now, instead of relying on just one time frame to make decisions, you look at multiple time frames to get a broader perspective on the market. This allows you to see both the long-term and short-term trends, and importantly, it helps you to spot high probability entry points. So here's how it works. You start by analyzing a longer time frame to identify the overall trend of the market. Then you zoom in on medium and shorter time frames to refine your entry and exit points. All right, now let's just break this down in more detail. Okay, the first step is to start with a higher time frame. You cannot trade effectively if you do not know the bigger picture. So you have to start by looking at the weekly or the daily chart. All right, these higher time frames give you a solid understanding of the dominant trend. So you should be asking yourself, is the market in an uptrend, is it in a downtrend, or is it range bound? The goal here is to understand where the market is going in the longer run. In this particular example, this is obviously an uptrend, right? Now, you've got the first piece of your puzzle, which is the direction of the market, right? Then the second step is to zoom into the medium time frame. Once you have the big picture, you can move down to the 4-hour chart or even the 1-hour chart. This is where you can fine-tune your understanding and look for confirmation of the trend. For example, if you saw an uptrend on the daily chart, which we did, you would want to look for bullish signals on the 1-hour chart, maybe a pullback or a breakout above a resistance level, something bullish. Basically, you just want to look for a bullish signal that supports what you saw on the daily time frame. Okay, so on this time frame, the 1-hour time frame, you are looking for entry signals such as price action patterns, support and resistance levels, or technical indicators that align with the bigger picture, the bigger trend. Now, the more confirmation you get, the better your entry point. All right, then the next step is to use the lower time frame for precision. Now, zoom into the 15-minute or even the 5-minute chart helps you to get the most precise entry and exit points. Okay, this is where you make your trade. You've already identified the trend on the higher time frames, and now on the lower time frame, you are looking for the right moment to pull the trigger. So on the 15-minute chart, maybe you see a breakout above a short-term resistance. You can see something here, right? A breakout above this short-term resistance. Or perhaps you spot a bullish candlestick pattern. You can see like this long bullish candle, you can see this three white soldiers, right, that appeared around here. Okay, you get a bullish candlestick pattern. At this point, you've already done the hard work on the higher time frame, so now you can just execute a well-timed trade with precision. Okay, so why does multi-time frame analysis work so well? Well, the primary reason is alignment. When you use multiple time frames, you are checking to see if all the time frames are in sync. For example, let's say your weekly chart shows a bullish trend, right? Your daily chart confirms that trend. And then your 1 hour chart shows a solid entry signal. If all these time frames are aligned, you've got yourself a high probability trade. But if your higher time frames are in one direction and your lower time frames are showing conflicting signals, it's a good idea to hold off on that trade. The alignment helps you filter out false signals and makes sure you are in the right market conditions. Okay, so by having this well-rounded perspective, you'll be able to avoid chasing the market and will enter trades with confidence and clarity. Now, with all this power comes responsibility, okay, and that means managing your risk effectively. So here are a few tips for using multi-time frame analysis while protecting your capital. The first is using stop loss orders. Okay, place your stops just beyond key levels of support or resistance, okay, on the higher time frame. All right, this gives you more room for the trade to breathe without risking too much. And then ensure that you adjust your position size. With a better understanding of market direction, you can increase your position size with confidence. But always size your trades according to the volatility of the market. Okay? And then do not over leverage. All right? Because multi-time frame analysis helps you make better decisions. But the market is still unpredictable. So always trade with a level of caution and discipline. All right? It is very, very necessary and important. And that is how you can use multi-time frame analysis to take your trading to the next level. Now, to recap, start by analyzing the long-term trend on higher time frames. Then use medium time frame to confirm the trend. Then you can zoom into the lower time frame for precise entries and exits. Okay, this strategy helps you make more informed decisions, filter out noise, and increase the likelihood of trading success. If you found this video helpful, smash that like button and make sure to subscribe so you do not miss out on more trading insights. Drop a comment below. Have you used multi-time frame analysis before, or is it something you are planning to try? Let us talk about it. Thank you for watching, and I hope to see you in the next video.